Welcome to the Deep Dive. You're here because you want to get smart, fast.
And today, we're doing just that with Mastek Ltd.
Exactly. Forget digging through all those dense reports yourself. We've done the heavy lifting for you. Think of this as your express lane to getting up to speed.
Yeah, we've pulled everything together. The official stock exchange filings, the auditor reports, both consolidated and standalone, the detailed financials, the press release.
The investor presentation slides?
Right, those key slides, and even their own internal review document for the fiscal year. It's quite the pile.
It really is. And our mission for you, listening in, is simple.
Yeah.
We're boiling down this mountain of info to the absolute essentials.
We want to give you the facts that count, maybe uncover a couple of surprising bits, and definitely make sense of Mastek's recent performance and those big strategic moves they just announced.
Okay, let's get into it then. We're focusing on the financial year ending March 31st, 2025, and the key decisions announced on April 18th, 2025.
Right. Let's kick off with the big numbers, the consolidated financial highlights for the whole Mastek Group.
Sounds good. What's the revenue story?
Okay, so for the full fiscal year 25, revenue from operations hit 3,455.2 crore.
3,455 crore.
Got it. And the really interesting part, that's up 10.9% compared to the previous year. So solid growth there.
Decent jump. And what about the last quarter?
Yeah, if we zoom into just Q4 of FY25, the revenue is 905.4 crore, and that year-over-year increase was even stronger, 16.1%.
Oh, interesting. So like you said, picking up speed towards the end of the year.
Exactly. Seems that way on the revenue front.
Okay, so revenue looks strong. How about the bottom line, profitability?
Right. Net profit after tax, or PETI, for the full fiscal year, it landed at 375.93 crore.
And the growth there?
That's a really significant leap, up 21.7% compared to FY24. Big jump.
Wow, okay. Almost 22% profit growth year on year.
But there's a little wrinkle. If you look at the Q4 PETI, which was 81.07 crore, and compare it to the previous quarter, Q3, it was actually down 14.4%.
Okay. So strong annual profit, but a dip from Q3 to Q4. Any idea why? Could it be like investments kicking in? Maybe that AI stuff?
That's a good question. It could be increased R&D, maybe project timing, seasonality.
Yeah.
It's definitely something to keep an eye on, even if the full year picture is, quite healthy.
Right. Context is key. What other financial metrics stood out?
Well, their operating EBITDA for the full year FY25 reached 529.2 crore.
Okay.
That's up 12.3% year over year. So the core operational profitability is also climbing nicely.
And EBITDA margin for Q4?
For Q4 FY25 specifically, the operating EBITDA was on 138.8 crore, and that translates to a margin of 15.3%. Pretty healthy.
Okay. And you mentioned currency fluctuations earlier.
Yes, exactly. If you strip out the impact of currency changes, look at the constant currency revenue growth for the full year.
Yeah?
That was 12.3% year over year. So the underlying business growth is definitely there.
Got it. Strong underlying growth, solid profitability for the year. Okay, let's talk dividends. Always important for investors. What's the news there?
They've recommended a final dividend of 16 per equity share.
16 rupees.
Yep. And since the face value is 5, that's 320% on face value.
Okay.
But the bigger picture is the total for the year. They already paid an interim dividend of €7 per share.
Right.
So add that 16 final, and the total dividend for FY25 comes out to 23 per share. That's 460% of face value.
23 rupees total. How does that compare to last year?
It's a pretty significant step up. Last year, FY24, the total was 19 per share, or 380%.
Ah, okay. So a noticeable increase. Shareholders will likely appreciate that.
You'd think so, yeah. It's a positive signal.
Definitely. Okay, let's switch gears slightly. Order backlog. What do the reports say about that?
Yeah, this is interesting. In Q4 FY25, their 12-month order backlog grew by 7.1% compared to the previous quarter, Q3.
7.1% quarter-on-quarter growth in the backlog. So what does that typically tell us?
Generally, a growing backlog is a really positive sign. It means they're signing up more work than they're completing in the period. It suggests, a healthy pipeline of future revenue.
Right. More confirmed business lined up for the coming year. Makes sense.
Exactly. It points towards continued momentum.
Good. Now, what about clients? Did they mention adding new ones or the total number they're working with?
They didn't specifically highlight a total active client number in these materials, but they did talk quite a bit about significant new client wins in Q4.
Oh, okay. Across different regions?
Yes, across the UK, EMEA, and the Americas. And these wins, of course, feed directly into that growing order book we just talked about.
Perfect lead in then. Let's break down the business by segment. Where's the money coming from geographically?
Okay, looking at Q4 FY25 revenue shares, the UK and Europe is still the powerhouse. 59.7% of the revenue came from there.
Wow, almost 60%. Still heavily weighted towards the UK and Europe.
Definitely. North America contributed 26.0%, and then AMEA, that's Africa, Middle East, Asia Pacific, made up the remaining 14.3%.
So, Europe, clearly the main engine right now. How about by industry? Which sectors are their bread and butter?
Looking at the full fiscal year 25 revenue, government and education was the largest sector by a fair bit, actually, 46.5%.
Nearly half their business. Okay.
Yep. Then comes health and life sciences at 31.3%. So between those two, that's, over 77% of their revenue?
Yeah, the vast majority. What else?
After that, it drops off a bit. Retail consumer is 13.0%, manufacturing and technology is 6.8%, and financial services is relatively small at 2.4%.
So heavily concentrated in government education and health life sciences. Is that a potential risk, being so reliant on just two sectors?
It's something analysts often point out, diversification can be key, but obviously being a leader in those specific sectors has clearly served them well so far. It's a balance, isn't it?
True. Okay, and service lines. What kind of work are they actually doing for these clients?
For FY25, the biggest service line was digital and application engineering. That brought in 43.3% of the revenue.
Okay, core tech services.
Exactly. Followed closely by Oracle Cloud and Enterprise Apps at 31.8%. That's another huge chunk.
Right, their Oracle practice is well known.
Very much so.
Right.
Then you have digital commerce and experience at 18.1%, and finally, data, automation, and AI at 6.8%.
Okay, so digital engineering and Oracle Cloud are the clear leaders there. Now, let's circle back to those client wins you mentioned. What were some of the highlights in Q4, especially in the UK, their biggest market?
Right. In the UK and Europe, they highlighted a few key ones. There was a multi-year extension with the UK central government's immigration services.
Public sector again, doing what?
Providing integration services, working with digital dashboards, seems pretty critical.
Sounds like it. What else?
They also landed a strategic deal with the UK's official export credit agency. This involves end-to-end software engineering and modernizing their citizen-facing digital channels. That sounds like a major transformation project.
Yeah, definitely significant. Any others in the UK?
An engagement with England's publicly funded healthcare system to innovate their recruitment service. And also working with a major health insurance provider to optimize their claims system using data transformation.
Wow, okay, so a mix of government and health, both renewals and new strategic projects. That's quite strong.
It really looks like it, yeah. Reinforces their strength in those key UK sectors.
What about outside the UK? Any notable wins?
Yes. In the AMEA region, they signed a contract with a big UAE conglomerate.
Doing what for them?
Implementing Oracle Cloud to automate their real estate and property management.
Okay, Oracle win in the Middle East and the Americas.
In the Americas, a strategic engagement with a renowned American statistical software pioneer.
Intriguing description.
Yeah, helping them transform finance, customer experience, and planning, also using Oracle Cloud.
So more Oracle success, this time in the U.S. Seems like they're leveraging that partnership globally.
Definitely appears that way. Good geographical spread on those key wins.
Okay. Now, Mastek's been talking a lot about AI. What's the story with their ADOPT did AI platform?
Right, ADOPT.ai. It's positioned as both their overall AI strategy and a specific platform they've built.
And the goal is?
The main aim is to guide clients, basically accelerate their adoption of AI, and help them get, real business value from it faster.
Are they using it themselves?
They say they are, yes. And they're claiming some pretty significant efficiency gains internally from using it, close to 30% on some projects, apparently.
30%? That's a big number.
It is. And they mention having over 100 use cases and more than 50 unique AI solution blueprints available through the platform, so it sounds quite developed.
It does sound like a serious investment.
Yeah.
How are they structured to deliver this? Is it a dedicated team?
Yes, they've set up a dedicated AI engineering center of excellence.
Okay.
And their focus seems to be on areas like enterprise AI, embedding AI across big organizations, agentic AI, which is about more autonomous AI systems, and building what they call AI native applications.
Applications built ground up with AI.
Exactly. And you can see how this connects back to that service line we mentioned earlier, data, automation, and AI. ADOPT.ai is clearly meant to drive growth there.
Right. It all ties together. Makes sense strategically. Okay, let's shift focus a bit to the corporate governance side. What came out of that April 18th board meeting?
A couple of key things. First, the board approved the continuation of Mr. Ashunk Desai as a non-executive director.
Okay. Why is that noteworthy?
Well, he's set to turn 75 in May 2026. And under SEBI regulations, the Indian market regulator, specifically Regulation 17(1)(a), continuing as a director beyond 75 requires shareholder approval.
Okay, so it needs a vote. Is he a major shareholder?
He is, yes. Holds about 10.97% of the company. So his continuation is likely seen as important for stability and, long-term vision, given his history with the company.
Got it. So keeping a key figure involved pending that shareholder vote. What else on the governance front?
They've appointed new secretarial auditors, Mrs. P. Mehta and Associates,
For how long?
for 5 years, starting from this fiscal year FY26. This also needs shareholder approval.
Okay. And who is P. Mehta and Associates?
The principal, Mr. Prashant Mehta, seems to have a strong background. Former group legal head, company secretary roles at large groups, involved with the Retailer Association of India. So, experienced.
Right. And anything from the main auditors?
Yes. They confirmed that the statutory auditors, Walker Chanyok and Co. LLP, gave an unmodified opinion on both the consolidated and standalone financials.
Which basically means
Basically a clean bill of health. The auditors didn't find any material issues or discrepancies in the financial reporting. It's what you want to see.
definitely reassuring for investors.
Right.
Okay, there were also some other corporate actions mentioned, a merger, ESOPs, and acquisition. Can you quickly run us through those?
Sure. First, the amalgamation or merger of Metasoft Tech Systems Private Limited. This was already a wholly owned subsidiary.
Okay, so an internal restructuring.
Essentially, yes. It became legally effective from August 1st, 2022, but got the final NCLT, the National Company Law Tribunal approval, much later in May 2024. Because it was a common control combination, they had to restate their standalone financials going back to April 1st, 2023 for comparison purposes.
But no impact on the overall group results.
Correct.
Oh.
No impact on the consolidated results we discussed earlier. It's more of a technical accounting adjustment for the standalone entity.
Got it. And the ESOPs.
Just a small increase in their paid-up equity share capital, about 5 lakhs, because they allotted around 95,000 new shares under their employee stock option plans. Pretty standard stuff.
Standard way to reward employees.
Yeah, okay.
And the acquisition. Biz Analytica.
Right. Back on August 1st, 2023, they completed the acquisition of 100% of Biz Analytica LLC, which is a U.S. company.
Okay.
And they also did a slump purchase of Biz Analytica Solutions LLP.
Yeah.
A slump purchase basically means buying a whole business unit, lock, stock, and barrel for one price.
And that resulted in?
It resulted in goodwill of about 1,032 lakhs being recorded on their books. That represents the intangible value brand, customer lists, etc., acquired in that deal.
Okay, integrating that acquisition. Finally, there was something about a tax arrangement, a BAPA.
Yes, a bilateral advance pricing arrangement, or BAPA. Mastek had applied for this way back in FY16. It's basically an agreement with tax authorities in advance on how to price transactions between related companies across borders.
To avoid disputes later.
Exactly. But in this case, they couldn't reach an agreement, so the application was closed.
So what happened then?
As a result, they reversed a tax provision they'd previously set aside for this, amounting to 2,755 lakhs. So that boosted their profit in the period it was reversed.
Ah, okay, a one-off boost from that reversal.
Seems like it. And separately, they also mentioned opting for a new corporate tax rate regime in India under Section 115 BAA, starting from FY23. This led to some deferred tax adjustments as well.
Yeah, lots of moving parts there on the tax and corporate structure side.
Definitely a busy year beyond just the core operations.
All right, that's a really comprehensive rundown. So just to wrap the key takeaways for everyone listening, Mastek showed pretty strong overall financial performance in FY25, significant revenue growth, even better profit growth for the full year.
Right, and a nice jump in the dividend payout too, plus that positive order backlog growth suggesting more to come.
And some really strategic client wins, especially in their core UK market, but also globally. And underpinning a lot of this seems to be that big focus on AI through 8LPT.ai.
Absolutely. And don't forget those corporate actions, Mr. Desai's continuation needing that shareholder vote, the new auditors, the technicalities of the Metasoft Tech merger, and embedding those Biz Analytica acquisitions.
So here's maybe the final thought to leave everyone with. Considering Mastek's clear push into AI and cloud, you see it in 8LPT.ai, you see it in those client wins. How well positioned does this really make them for what's coming next in the digital transformation space?
That's the multi-billion-dollar question, isn't it? What are the long-term implications of these bets, these strategic moves for their growth trajectory, and, ultimately for shareholder value? It's definitely something to watch.
It really is. If you found this useful and want to dig even deeper, all the source documents we used are up on Mastek's website.
Yep, check out the investor relations section, www.mastek.com.com/life. It's all there.
Perfect. Thanks for joining us on the deep dive. We hope this gave you a quick, clear, and valuable insight into Mastek Limited's latest position.
Until next time, stay informed.